All right, well, in our last segment, we talked about a food shortage, and now it's time to address a growing concern of mine, especially for agriculture, an impending diesel shortage, right? Distillate stocks have declined 53 of the last 79 weeks to their lowest levels since 2014, and then before that, 2008. Distillates have come to the forefront as one of the tightest areas of the energy market. U.S. inventories are 20% below their pre-pandemic average. For reference, inventories for crude oil are down 11% and gasoline's down only 1%. All this is happening at a time when we can least afford it. And you add to that something else, the consumer mentality. And Houston, we have a problem. Today's University of Michigan sentiment survey slumped farther from an already depressed level. About a third of consumers now expect their overall financial position to worsen in the coming year, the highest since the survey began in the 1940s. Ouch. Please welcome my next guest, Mike Lee, to help us sort all this out. Thanks for being on the show, Mike. I really appreciate it.
Scott, happy to be here, man. Yeah, we are in an ugly scenario across a lot of different places. I think the saving grace is the labor market. Yesterday, we got a jobless claims number at 187,000, which is about as low as you can get.
Right.
And we also got a horrific durable goods order number. And then right after that, a very good PMI number. So it's pretty confusing, but definitely a lot of issues underneath the surface here.
I thought, I brought up the Michigan consumer sentiment number because I think that that's such a large part of where we're going to be going in the near term. And I know you, and I watched you for many years on all the other networks. Again, if you don't know who Mike is, you've been under a rock for 20 years. But you've been fairly bullish, or very bullish, actually, of the equity markets for a time now. But I think you've kind of taken your foot off the gas here as of late. Do you know why?
Yeah, well, look, the situation that's going on in the diesel distillates is it's typical of a lot of other things that's going on. These sanctions on Russia are going to backfire in terms of the food supply. President Biden said that yesterday, and we've just had problems with the supply chain for 2 years now. It's been a disaster. That tons of money printing has led to inflation, which is somewhat running away, even though we've managed to tighten financial markets substantially. So Fed's only gone 25 basis points, but the jawboning and talking about it since September has moved the 2-year Treasury from 20 basis points or 0.2% to almost 2.2%. That credit spreads, financial conditions have tightened dramatically.
Yep.
So if we don't see a slowdown in a slowdown in month over month, the increase, the rate of change of inflation right away, that means a ton more tightening is coming. And in terms of stocks, the baby's going to get thrown out with the bathwater. So no matter how high quality stock you own, the valuation, the multiple is going to compress as financial conditions tighten dramatically. We haven't even gotten into balance sheet runoff yet. So I'm very cautious on the markets. I wouldn't necessarily say I'm bearish, but definitely not a bull or a super bull as some other people have called me.
All right, so I'm going to ask you one question. I mean, I think the previous CPI number we got was 7.5, and then went to 7.9. I think that was right. I'm not quite sure, but a lot of folks out there hung their hat on the fact that the rate of change had started to slow down a little bit, right? The previous one was like 7 to 7.5, which is a 5 basis point change, and then 7.5 to 7.9 was a 4 basis point change, and that maybe could be signaling a slowdown in inflation getting worse. However, we're missing the a couple of that month that we really saw an uptick in prices. And I think you're about to say that too, because that hasn't been factored in yet, has it?
Yeah, well, look, it's the month over month increase we're going to look at. And so obviously energy is going to be up in this one, and food is going to be up. And they look at CPI X food and energy. But what does that month over month number look like? If that's 2 or 0.3%, we're headed in the right direction. And the tightening that's going on in financial markets is making a difference. And so there's 2 ways you can attack inflation. You can increase the supply. We can create more stuff for cheaper so that prices come down, or you can crush demand, just hurting the economy so people can buy less. It seems right now the only thing that's being done is tightening financial conditions and kind of crushing that supply side. Crushing the demand side. And so if you crush demand, you're going to take us into a recession if we don't see these month over month numbers decrease. Because at this point in the cycle, yes, we're going to have a lot of inflation coming out from where we were, but we need to see a decrease in the speed of increase, if that makes sense. So if we're still accelerating at this point, like we're in trouble, and there's going to be a lot lot of tightening to come, which is bad for financial assets.
All right, so last question here. We got about a minute and a half. Are you saying that that's why we're starting to see like the 3, the 7, and then the 3, the 5, the 7-year yield overtake that 10-year yield today, or over in the last few days? We've started to see some of those short-term yields overtake the 10-year.
Yeah, so the yield curve is yelling recession, right? The yield curve is absolutely yelling recession right now. I think coming out into the end of 2023, they think the Fed's going to start cutting. Look, the Fed thinks that somehow they're going to be able to take the front end to 2.5%, and in unemployment's going to stay at 3.5%.
No way.
I mean, their forecasts have been wrong at every single turn of this, and I can't imagine that's right. But I mean, the equity markets are saying, hey, this isn't the problem we thought it was. So look, this is as confusing a time as I've ever seen in markets. So what I would say is just be cautious and buy these energy stocks, because that's going to work no matter what type of economy or market we're in right now.
All right, that's excellent stuff. And you know what I love hearing you say is the fact that you've been doing it a long time, and so have I. And this could be one of the more confusing times because there's a lot of mixed messages out there. I would say the messages are leaning more towards a slowdown and maybe some short-term pain rather than everybody being giddy and it's okay. But still, it's something to be said when guys like you and I have been doing it for this long aren't still getting a really clear message about what these numbers are telling us. So that means if you're out there watching the show and you don't get it, neither do we. So we're all in the same boat. So don't worry about it. I really appreciate you coming on, Mike. Good stuff there. Thank you very much, Mike Lee. Have a great weekend. All right. Time now for my favorite part of the day. We're dialing up the cow phone, right? Mike from Ottawa, Kansas writes, great info for us who need the truth and good info to make the best choices. What should we do if inflation is pending? Should we sell product and buy gold or other high-priced assets? Well, Mike, that's a great question, but I can't give out financial advice on air to someone I don't personally know. It's breaking the first covenant of investing, and that's to know your customer. But I do believe that farmers are already well placed as land, owning a home, and crops are good hedges against inflation. Remember, hard assets should do well in inflationary times. All right, here's Mike from Monticello, Iowa. He says, the Cow Guy Close shows how the other markets affect the commodities. Keep up the great work, Scott. I try to watch every day. Great show for RFD. Thanks, Mike. That's one of the main reasons we created this program. And finally, Clay in Saskatchewan, love your show, Cow Guy. Just wondering if you could get in a market analyst once in a while from Canada to talk about canola, oats, etc. Keep up the good work. You know what, Clay? That's an excellent idea, and I think we can do that. If you have a particular analyst in mind, text me again with the name of that person and location. All right, shoot me a text. The number is on the screen. That's 615-983-9681. Leave your name and state, and don't hold back. I want to hear the good with the bad. It's okay. Again, the number is 615-983-9681. That's going to be it from me. Have a great weekend. We've got loads of headlines that are swirling around, folks. So that's another great week of trading. It's come to an end. The bell's rung. I want to make sure that everybody's got an idea about what are those big things that we're talking about this week. We ended this week with all three of them, and that's going to be something that's going to be with us here for the duration, maybe 3 to 6 months out. So I really appreciate you all. We're here for you. This show's for you and about you. I'm having a lot of fun. I hope you are too. I'm Scott Shellady, otherwise known as the Cow Guy. This is the Cow Guy Close. I'll see you again on Monday.